today we are going to see about income statement and double entry system. So what is an income statement? So it is the financial statement which calculates the income and expenditure of a firm. So if we have to know if a company is in profit or loss, income statement can be calculated. That is, it is the net income after reducing all the commitments. Next we will see why is it prepared. So why is an income statement prepared? So it helps to determine the profit of the firm, and next the profit thus earned, is it sustainable or not? It helps to find whether the profit earned is sustainable or not. It helps to enable comparison with the competitors. So now let's see how is it prepared, how income statement is prepared. So there are 6 steps involved in the preparation of income statement. So the first one is the sales revenue. It is the total sales made without including the statutory tax. Next step is deducting the cost of goods sold from the sales revenue. So this is the gross margin. Here the cost of raw materials, cost of production, labor, etc. are included in this step. Next step is reducing general administration expenses from the gross margin. Expenditure, there are other expenditures other than the expenses. So there are 2 types of expenditures, the capital expenditure and the revenue expenditure. Capital expenditure is increases the assets, so it is not included in the income statement. It is entered in the balance sheet, whereas the revenue expenditure is included in the income statement. Next step is revenue expenditure minus revenue expenditure is subtracted from gross margin, which gives the operating margin. Here EBITDA, which means EBITDA, which means earnings before interest, tax and depreciation. Next step is reducing interest expenses and depreciation from operating margin. This gives PBT, which means profit before tax, and in the next step profit before tax is subtracted from tax, which gives PAT, which is profit after tax, and this gives the net income. So these are the 6 steps involved in the calculation of the net income. So this is the format of the income statement. First we will start with the name of the firm and the date on which it is prepared. Then we will subtract the cost of goods sold with the sales revenue. We will get the gross margin. Then it is subtracted by the revenue expenditure and the general administrative expenses, which gives the operating margin. Then the operating margin is subtracted by interest expenses and depreciation, which gives PBT, that is the profit before tax, and then tax is subtracted, which gives the PAT, that is profit after tax, which is the net income. So this is the format for the income statement. Accounting records. So there are different accounts which are to be recorded, and they are recorded by bookkeeping. So bookkeeping is identifying and recording transactions of accounts in the books of journal and ledger. So journal and ledger are the books in which all the all the transactions are recorded. So they are recorded by double entry system. Double entry system is a twofold aspect, which has the credit and debit. The basic principle is that there is a debit for every credit. The debit is recorded in the the debit is recorded in the left side and the credit is recorded in the right side. So we all know that assets is equal to liability plus owner's equity. So we all have a doubt that what are the transactions which are to be recorded in the debit side and what are the transactions to be recorded in the credit side. So increase in assets, decrease in liability and decrease in capital or income should be recorded in the debit column, and decrease in assets, increase in liability and increase in capitals are to be recorded in the credit column. Now we will look at journal and ledger. So journal is the first step. It is a chronological order in which the transactions are recorded. So the format for the journal is in the books of company's name, then date, particulars, LF, debit, credit. Narration is the short, like we should describe the transaction in few words, so narration should be written there. Next is ledger. So ledger is the second step. The accounts which are entered in the journal are opened in the ledger account. So the format for ledger is name of the account, then the left side debit side and right side credit side. So in the debit side date particulars amount, and in the credit side date particulars amount. So separate accounts have to be opened in the ledger.